Shortly after 6 o'clock here. I want to say thank you all for coming very much. I appreciate you taking the hour out of your evening to attend. Hopefully you gained some valuable information. We've got a ton to cover with all the information that has gone on, some changes that have been made. There's just not enough time to cover it all in an hour. So I've taken pieces of what I think is most commonly need to know base, I guess. That's how I can say that. What's most common to an average person. So we'll cover that. My name is Kim Dragowski. I'm the business manager and tax professional at Premier Tax Preparers. We're a South Dakota-based firm, but my office is in Aberdeen. I thank you, Sioux Empire, for having us and allowing us to share information with everyone here. And a little bit about our partnership with Sioux Empire. We're proud to offer our services to credit union members of Sioux Empire. So I invite you to learn a little bit more about that service and how that works as well. I'll stick around for a bit after the seminar too, so if you have additional questions that we don't cover or that you don't want to ask in front of everybody, feel free to grab me afterwards and I'm happy to answer anything I can. Just a little tidbit about Premier Tax Preparers. I'll read it out because we are recording and we're making the video available on the website as well. That way for if you have family or friends that couldn't come tonight, please let them know that it'll be available and they can watch it from home. We are passionate about providing tax preparation services, understand the importance of strong financial relationships, and thrive on a commitment to serve local communities in the region. Our mission is to actively keep our customers informed and provide exceptional service from start to finish. So this is one of our activities that we do is by having these seminars because I think it is important that everyone realize what is constantly changing in the tax world. So that's part of our mission is to keep you informed as much as we can. And so between our annual seminars and our Facebook page, our website, our newsletters, we're constantly feeding information to our clients and through the credit union. So watch their pages as well and the newsletters for anything new coming up. Had to throw this in there. In this world, we all know nothing is certain but death and taxes. And then even after we die, there still might be taxes. So it's very applicable. What we're going to cover, I'm going to start with going over what you can expect when you go to file your tax return this year for the 2012 tax year. So right now, January is here. Soon you're all going to be getting your W-2s, your 1099s, your interest statements, your things like that. So we'll cover what you should expect. And then we'll jump into the new changes and what tax updates were made for 2013. Then we'll briefly touch on e-filing and how that works and some record-keeping tips. And then any questions. Feel free if you have a question while we're on a certain slide, just raise your hand and we'll get to you right there. Don't have to wait till the end. So for 2012 tax year, one of the biggest things I stress to all of our clients is get organized as best you can. Even if you don't do it all year long, that's preferable, obviously. But if you, as you're starting to get things in the mail, make one folder. Get a big red folder, write 2012 tax documents on it, and then you would just put all everything into that folder, and that way when you are ready to file, you know what's there. Another tool that we offer to ensure that you're not missing anything when you are ready to file is what we call our tax organizers and worksheets. On our website, we actually have a page that's for just the organizers and worksheets. So you could go to premiertaxpreparers.com and there's the organizers page, and there's the Premier Tax Kit, which is the personal organizer. And then we have a business one as well, if anyone has a small business or any kind of business that you would want to use that for. We also have worksheets for some more industry-specific type businesses. If you have rental properties, there's a very good, useful worksheet on there for that. Or if you know someone with a daycare, it just is a good worksheet to make sure that you're not missing anything that's specific to what you do. Things like truckers, clergy, that might have special items that we need to know. So those worksheets should really help. Of course, the deadline to file is the April 15th this year. Last year was April 17th, so we did have a couple extra days, so that was nice since it was on a weekend. But it is the 15th again this year. You do have the opportunity to file an extension if need be. That extension is an extension to file your actual return. If you are going to owe taxes, you still need to make an estimated payment by the April 15th deadline. So a lot of people get confused by that. They think if I file an extension, I didn't have to send any money in. So be aware, if you do have to pay, please send an estimated payment by the 15th with that extension. So going into the 2012 tax return, some things that we should be aware of that can affect your taxes are if you have any major life events. If you were married in the year, obviously that's going to change the type of tax return that you file, and you might get some additional benefits because you got married. Or if you got divorced. People sometimes get confused if you filed for divorce in December but you're not legally divorced yet. That wouldn't take effect until the following tax year. So if you are technically divorced or legally divorced in the tax year, that's the year you can do that on your return. If you had a new child, obviously you have a new dependent, you'd be looking at the child tax credit, and you probably have some medical expenses as well. So if you have a new child, obviously as your tax professional, we would need to know the child's social security number, some things like that. So make sure if you work with somebody, or if you do it yourself, or you come to us, let us know that you had a child in the year, because we've had that happen, especially with people that have children already. They forget to let us know that there's a new child to add, and they get left off. Or if you have an adoption, or if you're a foster care family, there may be some additional credits that we can take for those as well. If you have a death, if your spouse passes away, make sure to let someone know, or your tax professional know. There are some different things that we need to do with that, and possibly look at your estate return and different effects of that. So if you are laid off, South Dakota's been pretty good with unemployment, so we're pretty fortunate that way. But if you are laid off, then you might be looking at claiming unemployment insurance or unemployment compensation, and so that could affect how your taxes are done as well. Job search, many people don't realize that you can take expenses for looking for a job. So if you have to go out and hire a professional to write your resume, and whatever their fee is, keep that receipt, because we can look at using some of those against your income as well. Same with mileage. If you're traveling for interviews, many things, I guess, that are related to looking for a job, we can deduct those. If you have a job-related move, if you decide you're going to move from Rapid City to Sioux Falls because you got a job at Sioux Empire Federal Credit Union, we would be able to take the mileage for you moving from Rapid City to Sioux Empire, or to Sioux Falls. We would also be able to take, if you have a moving truck, or hire a company to move you, many things related to that move. If you just decided to move from Rapid to Sioux Falls because all your family's here and you just want to be closer to family and friends, that's not a deductible move. It has to be for a job. And if it's even a closer area, it has to be just at least 50 miles from your previous location. Major medical and dental. Just about anything you could think of for medical, dental, chiropractic. There's a lot of things that kind of go bundled into that group that qualify for medical and dental expenses. If you itemize on your tax return, we can look at taking some of those costs if they're above a certain percentage of your gross income. So if you do have a year that you've had a lot of medical issues, that you are making larger payments than normal, put that in the tax organizer and let us know, because that's something that we should look at. If something did happen, and for instance, my daughter ended up Mayo Clinic 1 year. So that's not a small chunk of change when you have to go to a hospital like that. So, if you incurred, $100,000 of medical expenses, but you only paid $10,000 of that medical cost, that's the amount, the $10,000 that we could take on the tax return as itemized deduction, is whatever you've actually paid in that tax year. So if you pay that same $10,000 for 10 years, we take that every year. So if you've sold or purchased a house or a home, make sure you bring your closing settlement statements so we can get that on the return. Now also, starting a business, nowadays a lot of people do have a small business or something on the side as well as what they do for work. So if you've started a business in 2012, or if you're going to be starting a business, talk with somebody in our field, because we really think it's important to get you off on the right foot. Make sure that you're getting your books set up right. That way, when it comes to tax season, if you're not keeping track of what you should be keeping track of, it makes it a very difficult process to get your taxes done. So, and it'd be a bigger headache for you as well in the future. So, if you are going to start a business, or you did, please talk with us. We have business tax organizers as well, like I said, to make sure that you're keeping track of everything you need to. Let's see on that. For 2012 tax year, the exemptions, personal exemptions and standard deductions did go up. The personal exemption for each dependent is $3,800, and that went up $100. And then if you take a standard deduction instead of itemizing your return, then it is this. If you're a single filer, it's $5,950. If you're married filing separately, it's $5,950. Now, if you're filing jointly, married filing joint, it's $11,900, and if you're a head of household filer, it's $8,700. And if you are 65 or older, and or you're blind, we add a little bit to the standard deduction amount. So we'd add an additional $1,450 for single or head of household filers, and $1,150 for a married filer. The alternative minimum tax. Some of you may know what that is, maybe not. The alternative minimum tax had a patch that was in place, and it was set to expire, which was going to affect a lot of people that made a lower income level, I guess. So we were all paying some more taxes through this alternative minimum tax. So the patch has been applied retroactively back to January 1st of 2012 and has been made permanent. So that is a very good thing. This is going to help a lot of taxpayers as they file their 2012 return. There are exemption amounts for the alternative minimum tax, and those are the $50,600 for individuals and $78,750 for married couples. If you qualify when we do your tax return, there may be some personal credits that you qualify for, and that might offset any AMT amount that shows you are owed. Mileage rates. First thing I'll say is keep a mileage record. If you have any business use, medical miles, moving miles, charitable miles, please keep a mileage record. We have that on our website as well, so if you need one of those, go and print one off. It makes it much simpler when we do your tax return if we actually can see that you've kept track, instead of saying, I can go back and finagle one. And then I'm thinking about last February and trying to think, well, I went to Sioux Falls this day and Rapid that day and Pierre this day, and trying to put it all together, it can be a nightmare. So please keep a mileage record, and you can make note, where the trip was to, and what type of use it was. So if it was for business, or if you were volunteering for something, or if it was for a medical trip. So, and you can put them all together and we can work through it that way, or you can keep separate ones for each category. But the 55.5 cents is for business use per mile. Medical and move rate is the 23 cents a mile. And charitable miles are 14 cents per mile. So if you are a volunteer and you're going and traveling and doing things for qualifying organizations, then we can keep track of that volunteer mileage and deduct that as well, 14 cents a mile.
What's a qualifying?
Either the nonprofit organizations like United Way, Goodwill, Salvation Army, a lot of your churches, you can qualify through your church.
Fire departments and
Sure. Yeah. So there's a lot of different fire departments and ambulances, is what she said. So there's a lot of different things that can qualify for that volunteer work. And if you're unsure, just write it down and then just make a note next to it. Questionable. And that way we know, we can look at it and see if it would qualify. Yep. Okay. Any questions on the 2012 information before we jump into 2013? All right. So the fiscal cliff, we saw it posted everywhere. It was plastered all over the internet, the TV, the radio. We all knew it was coming, and it was kind of scary to think about. And it was very hard for us to do our job as far as helping our clients plan, for people that do plan ahead for their taxes and year-end planning. So a lot of people I've heard, said, it's not going to affect me anyway, why bother, change the channel, what's on ESPN, or I don't make enough money to worry about it. And or you were paying attention and you say, now what am I supposed to do? So likely you or somebody you know has said one of those three things probably regarding this fiscal cliff. So what I want to help get out to you today is that see that these changes are going to affect you. It doesn't matter how much money you make or you don't, and help you what to do, help you understand what you should do to help yourself with these changes. So if you aren't real sure what the fiscal cliff is or was, it was when a number of tax cuts and temporary assistance measures were going to expire on December 31st, 2012, and among other federal budget issues. We're not going to go into those. They've given themselves a couple months here to figure that part out, but at least they made some decisions so we can do our job and get through tax season. So these are a few of the tax credits and cuts that were going to expire as part of the fiscal cliff. So they were going to take away the $1,000 child tax credit per child or per dependent, and that was going to be gone. That was going to affect a lot of people, especially if you have multiple children and you rely on that $1,000 tax credit. The Social Security 2% tax cut was going to be gone. We'll talk about that in a minute. The ordinary dividends were going to be taxed at 39.6% instead of 15%. The $2,500 American Opportunity Tax Credit for college costs was going to be taken away as well. Some people were considering prepaying tuition just to get that credit for 2012. The adoption credit was going to be taken away, which is a great benefit for families that do adopt. And the estate tax, that was the hugest, most talked about probably in our industry, was what was going to happen with this estate tax. So if someone passed away and their estate was valued over $1 million, they were facing the 55% estate tax. So every lawyer in the country probably has been bombarded. I know especially in South Dakota, because if you have a small farm family or own a business or have an estate that you think is going to be over that $1 million limit, you were going to be faced with a 55% tax. And my family is a farm family, and my mom's passed on already, and my dad is there still, but we're under that same situation and considering if something happens to him, we have this estate, what to do with the farm, and we if we were going to have to pay the 55% tax, we'd have to sell over half of what they've worked their entire lives to build, just to pay the tax on it. So it was going to be a very sad situation for a lot of families in South Dakota. So thankfully, they came past the 11th hour, but they made the American Taxpayer Relief Act of 2012. Agreements were made to resolve many of the pressing issues, although some are temporarily. But but I wanted to share what did happen. And so here is how you will be affected for sure. So if you work, your employees now are going to have a Social Security tax increase of 2%. So they did not extend that cut. It was 4.2% before. So now you're going to see that maybe will very shortly on your next paycheck, or maybe not. But that also applies to self-employment tax. So you can expect that extra 2% to be due. What I would suggest is review your withholdings. If you've worked for the same place for quite some time, take a look at a Form W-4. That's on our website as well. So there's instructions on there and a worksheet. Basically, it works you through figuring out how much you should have withheld to ensure that you're having enough, but maybe you're having too much. But that could be reviewed and then update it if you need to. And you can just fill one of those out and then give it to your company to update that for your paychecks. So an example, if you earn $50,000, you can expect that an additional $1,000 is going to be taken out for the Social Security tax. So you can figure that's over $83 a month on top of what you're already used to paying. So, you know, for some people that's going to be a sizable amount. That might pay your phone bill or your cable bill or your gas. So you need to expect that that's going to be taken out. And employers actually have to start taking that out no later than February 15th of this year. So within the next month and a half, you will see that money coming out. What was extended and for how long? They did extend the child tax credit, $1,000 per child, and they made that permanent, which we kind of assumed that they probably were going to do. I can't imagine that they would have let that go. So we're good to see that. They did extend that earned income credit for 5 years, so that will definitely help some people out. Also, the college $2,500 American Opportunity Tax Credit was extended for an additional 5 years, and then we'll just see what happens after that. There is also still the lifetime learning credit as well. The mortgage insurance premiums deduction can still be used as mortgage interest deduction if you're itemizing, and that is renewed through 2013. So for this current tax year, 2013, if you have mortgage insurance premiums, you can expect that you can still use that for 2013, but then we'll just see what happens for 2014. Same with the state and local sales tax deduction. If you itemize and you claim those sales taxes, and that's again also good for 2013. So are the educator expenses. If you are a teacher or know a teacher and you have unreimbursed expenses, which many teachers do, you're buying supplies for your own classroom, up to the $250 limit we can exclude on there. The tuition and fees deduction as well. We can optimize between the American Opportunity Tax Credit and the tuition and fees deduction and see which one's more beneficial for your situation. That's usually
Excuse me, on those educational credits, is it just tuition and fees that are allowed? Or is it housing costs, books?
Your books are usually included with that tuition and fees.
Okay.
So if you are keeping receipts on anything that you're getting from the bookstore, things like that, we can read through.
Yeah, because I got a daughter in college.
Yep, so every receipt, yeah, that you're having her spend money on, yep. Also, charitable distribution of IRAs. If you had an IRA, you were allowed to take a tax-free distribution for that if you were going to give it to charity. So they have extended that through 2013 as well. So if you feel like you need to do that, it would probably be a good idea to do it this year. We don't know if it'll be there in 2014. And then they've also extended many energy tax credits for the wind, solar energy, things like that. Also for the business and home properties, if you've made some improvements that they might qualify for energy tax credits, bring those receipts in, and we can determine if that qualifies for that. They haven't determined if that's a long-term thing yet or not, so we don't know how long that's gonna be good for yet. But they did do it for 2012. So what you should know, again, is the top income tax bracket has now been moved to 39.6%, and that's for taxpayers that do have taxable income of $400,000 or more if you are single, or it goes to $450,000 or more for married filing joint filers. The maximum capital gains rates also went up. They are now 20% instead of 15%, and those are again for those taxpayers that have taxable income of the $400,000 plus or $450,000 for married filing joint. There's a lot of talk. You know, Obama wanted to have that down in that $250,000 range, but we got the $400,000 mark. So that is what that rate is for. So if you do have, going back up to the top tax bracket, if you do have income below those two levels, you can expect nothing to change for your tax rate.
Excuse me, but the tax will be, let's say you make $450,000. The tax will increase on the $50,000, not on the $400,000, right?
Whatever your adjusted gross income is, your AGI, that's what.
But the first $400,000 is still the same as an old time, right?
Yes.
What would the capital rate, capital gains rates be for those with income less than $400,000?
I can tell you right now. In our industry, we rely on charts, references, books. If you ever come across somebody in this business that says they just know everything, please don't work with them. You don't trust them. I can tell you. Capital gains rate is not on there.
It's not still the 15.
Well, if I can find it.
Doesn't it stay at the same 15%?
I'm sorry.
Doesn't it stay at 15% where it had been, the capital gains?
For less than $400,000.
No, I'm not 100% sure on that. I'm not going to say yes for sure because I want to make sure before I said that. I will find out and I will get back to you tonight. Any other questions on those two points? Okay, so the state tax rate, that was going to be that 55% tax rate. They changed that, so now the tax rate for that has increased to $40,000, but they kept the value the same. So if the state is valued at $5 million plus, it's actually technically 5.1, I believe. Then that would be subject to that 40% estate tax. So instead of going to be the $1 million exclusion limit at 55%, it's now $5 million value at the 40% estate tax rate. So that does help a lot of people. Still, if you're a little bit leery about the state taxes, please work with somebody on figuring out what to do and do some estate planning and work around that. That's about the best advice I could give you to work on that for now. Employers, like I said, must begin withholding the additional 2% no later than February 15th. So that will be affecting everyone soon.
What happens if an employer doesn't withhold it immediately? Do you have to make it up then on your 2013 return?
I haven't heard that anywhere. I imagine that the employer could probably face a penalty.
Or you have to pull it out down the road from your account? Or
That's possible. There's, with it just happening, all the legislation changes, they're just still getting all the information out to everyone on what the specifics are, how that's going to work. But that, I think, is why they've set the date to a month out for February, just to allow people that time to figure it out and make those changes and get the information to their employees and staff and whatnot, so. And then in 2013, there's also going to begin phase outs for itemized deductions and personal exemptions. So those will be for taxpayers that have the adjusted gross income plus or head of household, and $300,000 for married filing joint. So that is something to look out for if you are in those income levels. Be aware that you will see those phase outs coming soon. Now, what should you do with all of this information? Try to get organized. Work with somebody to get you organized if you're not very good at that sort of thing. Again, make a tax-specific folder to keep important records in all year long. Not just in January when you're starting to get all your W-2s and 1099s. Make something to keep in your file cabinet all year long. That way, if you go and buy a house, you can put all the information in your tax folder. Or if you have a child and you get some new information, or if you have any of those life events, something that maybe you won't think about, especially when it comes to tax season. Make questions. If you think of something, if you don't want to just call and ask the question right away, write a note. That way you're not forgetting to ask when you are having your taxes prepared. And use an organizer in the worksheets, because that really does make a difference to make sure nothing is missed. And if you work with a new preparer this year, if you've never done taxes with a preparer, if you've done it yourself, bring in a copy of your last year's return, because we want to make sure that we don't miss anything if you've got carryovers, and we'll always review the last year's return with doing the current return to make sure that nothing was mistaken or forgotten. Again, work with a tax professional that's going to be there for you and answer questions. Some companies are there year-round and some are not. We are. So we want to make sure that we're there to help when you need us. And so work with somebody that you trust and can get a hold of. That's important. And keep informed. Like I said before, watch the credit union newsletters, our website, our Facebook pages. We're constantly putting updates on there. So when we get informed by the IRS that they're going to change the mileage rate, I put that on our Facebook page right away. So there's constantly things being added. In our line of work, we never know when things are going to change and what happens, and so we try to keep you informed all year long and let you know what is going on. E-filing, you probably have heard of it, you know what it is. Very few people paper file, and they haven't for many years. But since 1990, there have been nearly 1 billion Form 1040 series tax returns filed, and it's safe and secure. We've never had a problem with it. Haven't had any clients say they've had any problems come from it. And it's the normal thing nowadays. Before we had to mail everything in, and back in the day we had to do it by hand, but no, we just e-file. And actually, firms that are paid preparers that do over 10 returns, we have to e-file. The IRS regulates that. So if you have a firm that's telling you you should opt out from e-filing, you can do that. Just as professionals, we can't steer you into that. So be leery a little bit if somebody tells you to do that. But you can choose to opt out of e-filing if you prefer to have it sent in via mail. Record keeping, I suggest keeping everything for at least 5 years. You'd want to keep your tax return copy that you get, any tax forms, your W-2s, your statements, any sales records or receipts that you have. Keep those for at least 5 years. The IRS suggests 3 at least, but I always like to say a little bit longer because you never know what you're going to need them for. Actually, my husband and I just took a trip and we had to get passports, and it was a difficult process for some reason for him, and they required him to provide all of his previous addresses ever. And so we had no idea how we were going to figure out everything. And so we were kind of panicking a little bit in how we were going to figure out what all of our addresses have ever been. So luckily, I've always kept our tax returns. So we went back for 10 years and then had to go to his parents to figure out what the ones prior to that were. But we were able to get everything we needed off the tax returns because they had the addresses on his W-2s, on our 1040, everything we needed. So it was kind of a ridiculous thing that they required, but we made it work thanks to our tax returns. So just hang on to some things for at least 5 years. If you get a letter from the IRS, please don't panic. Work with somebody, call us. We're happy to help look at those letters, and we can, for the most part, quite simply deal with the IRS in responding with a letter. If you are having trouble with them, trying to get communications or getting something resolved, work with the Taxpayer Advocate Service. There's an office in Aberdeen, and if you call that number, the ladies there are really great, and they're a great resource, and they are on your side. So kind of that liaison and really help resolve matters in a pretty timely manner. So that's a good resource for you to have. And my little blurb about us, let us help. Working with the credit union and offering our services through the credit union, you can bring everything right here into the credit union and we'll work on your return. Or you can choose to work with us anytime, anywhere. We have an online portal account. It's just like online banking, except it's for your taxes. So feel free to look at the website and learn a little bit more about how that system works. But if you're pretty comfortable using online banking, I think you'll really like how that works for your tax return as well. And then you always have access to it. When it's complete, you can go and print it 2 years down the road if you're getting a loan, or if you need it for whatever you might need a copy for, you can go in and print one off. And we also do review prior years at no charge. If you feel like somebody in the past has done your return and didn't feel quite comfortable with the result, we'll review it. We won't charge you anything for that. So we want to make sure that things are done right for you too. People do make mistakes, so we can do amendments. So we'd be happy to help with that. And that is free for you as credit union members, as the amendments as well. We do prepare all types of returns, so if you have just personal returns, an easy return. If you have children at work and you need to file their return, we can certainly do that. Or if you have a corporation, a partnership, estates, things like that, we'd be happy to help. And then we file your return at no charge. No additional charge to the preparation fee. There are some places that, obviously that's a cost for us to be able to do that, but we don't pass that on to you. So that's all my contact information. Feel free to write that down. That's our direct number to our office in Aberdeen. And then my email address and our website address as well. So we've got a little time here. We kind of cruise through pretty good. So what questions might anybody have we didn't cover? Is anybody here a farmer or a rancher?
Kind of, sort of.
Okay. Do you work with somebody? Okay. Because there were some specific things, obviously, that changed. Yeah. Any other self-employed people? If you are, if you know somebody that's self-employed, I did bring some specific information for self-employed small businesses. So we'd have that. Otherwise, no one has questions. I guess that's my spiel. Like I said, if things are constantly changing, we're still getting information's coming out, and because this is so new, I always say this is what we know today. Tomorrow something could change, but we do our best and rely on getting the information as quickly as possible and updating what we have. So feel free to contact us anytime you need something. They're coming to the office here in the credit union, and we'd be happy to help. So I appreciate you all coming tonight. If you have any questions, again, I'll be around for a little